Most people think the only way to use Bitcoin is to buy it and eventually sell it. I don't think that's the best strategy. What if instead of selling your Bitcoin, you used it to generate income without giving it up? Here's how that works. When you sell Bitcoin, you trigger capital gains taxes, you lose future upside, you shrink your long term position. If Bitcoin appreciates over time, selling can be extremely expensive. Instead of selling, you borrow against it. Platforms like Coinbase allow you to use Bitcoin as collateral. They got rates at like 4.5% right now. They are variable. It's kind of similar to a home equity loan, but you don't sell your house, you borrow against it. Let's say you own $100,000 worth of Bitcoin. Instead of selling it, you borrow 30% against it. That gives you $30,000 in cash. Your Bitcoin stays invested. If Bitcoin doubles, you still benefit. You take the 30,000 and buy income producing assets like STRC stock, SCHD, or other high yield ETFs. This works if your yield is higher than your borrowing cost. If you borrow at 5%, and your investment yields 8% or higher, you keep the spread. This is not risk-free. If Bitcoin drops significantly, your loan to value increases, you could face liquidation, and you may need to add collateral. This strategy only works if you keep leverage conservative. I'd recommend 20% or less. I see Bitcoin as a growth asset. I see dividend stocks as income assets. Growth builds wealth. Income builds stability. When structured correctly, you can use one to support the other. But if you're a long-term Bitcoin holder who doesn't want to sell and you want cash flow, this may be worth understanding. In the next video, I'm going to break down what happens if Bitcoin drops 50% and how to calculate liquidation risk.